2025 has been awesome already, and I told you guys two of my flagship strategies that have taken the internet by storm. Two of my flagship strategies which have created the highest millionaires in Forex trading in 2025 alone. If we can just go to TikTok, let me just show you guys what people are saying concerning those two strategies before I'm going to be showing you guys again steps on how you can start using it today. You can just look, this is on TikTok. You can see people are getting even 90% win rate. People are getting their first payouts in Forex trading. People are getting their first withdrawals in Forex trading. People are seeing profits for the first time in Forex trading using those two sacred flagship strategies, which I decided to borrow from Godlove University and bring to the YouTube for the first time, all right? Because these are all Godlove University. Godlove University is just my Forex Academy where I'm going to be able to teach you A to Z on how to trade in the Forex market. So if you want to join Godlove University, you know what to do. Check the link on the video description if you want me to be your mentor. So those strategies came from Godlove University, and it's just GUMVRO and GUORB, all right? So I want us today to focus on GUORB. So why is it called GUORB? GORB stands for the Godlove University Open Range Breakout Strategy. The strategy in general, no one is reinventing the wheel, is known as the Open Range Breakout Strategy. But the reason why we are putting GU on the one which is going to come from me is because we have been able to put modifications, which without those modifications, the strategy is not going to work, full stop. All right, so I have taken the strategy and made it my own. I have taken the strategy, and after years upon years of backtesting the same strategies, this is 10 years of experience. So after 10 years of experience of backtesting and testing the same strategy over and over, I have been able to have my own parameters that can actually work. So that's why you see I have Godlove University before the strategy, GUORB. Okay. So let's quickly go. I'm not going to be wasting time. We're going straight into the video. There's no intro so that you guys can get it, all right? I already have a video on this channel explaining that strategy A to Z. But I'm still going to go through the strategy again today because remember, in Forex trading, you need to be very, very flexible. Something that was working yesterday, there's no guarantee it's still going to be working tomorrow. Something that was working in 2024, there's no guarantee it's still going to be working in 2025. So you need to be flexible enough to know when something is not more working and do the necessary changes. That's very, very important. So we're going to go through the strategy again, and I'm going to be showing you guys some modifications you need to pay attention, all right? You need to pay attention for these particular modifications if you want to make it big with this strategy. So let me just start here. The methodology of the strategy is simple. We're using the strategy at the start and at the end of major market sessions. Remember, at the start and at the end of major market sessions. That's the general rule. And then there are some currency pairs or some assets which will only use the strategy at the start of major market sessions, like US30. On US30, we're all going to be trading two sessions, London session and New York session. And we are only trading at the start of those sessions, not at the end of the sessions, because at the end of the sessions, the liquidity is very, very low. The market is dying off. Major banks are already closed. So you will see the volume will be very, very small. So we don't want to be trading at that point in time. For example, the end of the New York, if you guys must have noticed, the volume is very, very small. You will see the market moving very, very slowly. So we don't want to be trying to trade at that particular point in time. So that's just a modification for US 30, which is an index, right? But for other currency pairs or other assets, we're going to trade at the start and at the end of those major market sessions. Because if you take something like the London session opens in South Africa at 9 a.m. For your wherever you're located, the time is going to be converted according to your time zone. For me in South Africa, the London session opens at 7 a.m. GMT. Since South Africa is GMT +2, it then opens at 9 a.m. in South Africa. So always check in GMT and then convert according to your time zone. All right. So at 9 a.m. I already in South Africa, I already know the London session is going to be opening, and it closed at around, let me just see, the London session closes at around 6 p.m. In South Africa. That's around 4 p.m. GMT. Since South Africa is GMT +2, it closes at 6 p.m. So at 6 p.m., there's still a lot of volume in the market. The market is still very, very volatile. The market is still liquid, so I can still trade at the end of that session, but only for selected assets, which I'm also going to be telling you guys. So what's the time frame we're going to be using here? We're going to be taking gold, for example, right? Or let's take the most popular pair Which pair can we take here? Let's just take Euro USD. Let's take Euro USD for example, so that you guys can see what is going on here. Or Great Britain Pound USD. I'm looking for the one that has a lot of volume, so that you guys can actually see what is going on. Okay, we're going to use this particular pair, which is Great Britain Pound USD for this example. The time frame, number one, was the time frame. Our time frame is a 50-minute time frame. You can test this on different time frames, but for me, the one that is working the highest for now is 15 minutes. So I want to make sure I don't miss any. Remember, I already made some notes for you guys. All right. After this video, you'll be able to start using this strategy without any problem. Good. So time frame, what is our time frame again? The 15-minute time frame. And then we need one indicator. So the name of the indicator, this is the name of the indicator right here, Market Sessions by Leviathan. Okay, Market Sessions by Leviathan. This should be a free indicator. So you just go on your chart, search and put this indicator on your chart. When you put the indicator on your chart or any other indicator that is going to show you the market sessions, you need to make some few settings or some few changes. So just click on the indicator and then go up here where you see you have these three dots, right? Click on those three dots, come down to where it says settings, and here we want to confirm go on input. We want to confirm all our market sessions. All right, we want to confirm all our market sessions to make sure we have all of them as they were supposed, or as they are supposed to be. So we're going to be trading the Tokyo session, the London session, the New York session, and the Sydney session. Remember, I'm just saying overall. It's only when we go to some assets like US30 where we're going to be narrowing it down to just 2 sessions. But for now, we're going to leave it on all Tokyo session, the London session, the New York session, and the Sydney session. So Tokyo session normally starts at, remember the time is in UTC. So you need to be able to understand UTC stands for GMT. All right, GMT time is the same as the UTC time. So that's why if you can see down here, the time zone is UTC. So anything you're putting here is in UTC, all right? And then my time in South Africa, if you can check here, is UTC plus 2, which is 9:19 a.m. If you can check up here, the same time up there is 9:19 a.m. So check the time in UTC. Tokyo session opens from midnight to 9 a.m. UTC. So for me, in South Africa, it's going to be from 2 a.m. to 11 a.m. London sessions open from 7 a.m. to 16. The same thing I was explaining, which for me in South Africa is obviously going to be from 9 a.m. to 18 o'clock. New York session open from 12 noon UTC to 22 o'clock, which for me in South Africa is going to be from 2 p.m. to midnight in South Africa. Sydney session from 21 o'clock, which is 21 UTC, which for me is going to be 23 o'clock, right up to 6 a.m., which for me in South Africa is going to be 8 a.m. All right, no matter where you are, so long as you've already put these settings, it's going to be converted automatically according to your time zone. So make sure you have all these settings, everything the same way it is, and then just click on OK. So even if you're not using the market sessions by Leviathan and you're using any other tool, make sure it has those settings. So long as you've already put those settings in your software, you're good to go. All right, you're good to go. The market session, if you can check on my screen, you can see we have the Sydney session, the Tokyo, the London, the New York, and then you have the Sydney again. It just keeps going in circles. So each session is having a line. For example, the Sydney session with this color, you can see it started right here at 23 o'clock in South Africa, which is obviously the same as 21 o'clock UTC. And it ended at what time? It ended at exactly 8 a.m. South African time, which is the same as 6 a.m. GMT, which is the same thing we said. You see, the Sydney session started right here at 2 a.m. and ended right here at 11 a.m. All right? The London session, so you can already see everything. You can see everything on your chart. You can see the New York session and everything. Good. So that is it on setting your indicator and getting your chart ready. Now, we are not gambling with this strategy. We know what we are doing, and there's a reason behind why the strategy is very, very successful. Why are we trading at the start and at the end of major market sessions? You guys need to know what is a market session. A market session or market sessions are just different periods in the Forex market where the Forex market is more active in different sections of the world. All right, just different periods in the Forex market where there's more activity in different areas of the world. For example, if we take the London session, that's where the banks are going to be opening in London. That's when the banks are going to be opening in the United Kingdom, or we can say the European Union or the London session. If we take the New York session, that's when the market is going to be opening, the big banks are going to be opening, the stock market is going to be opening, the financial market is going to be opening in New York or Northern America. So you can say the North America session or the New York session. So if you go to the New York session, the currency pairs that are going to be affected are not just the New York or just the United States currencies, all right? Not just Euro USD or not just USD JPY. No, any Northern American country will also be affected, like Canada. So USD CAD, Great Britain Pound CAD, CAD JPY, they will all be affected by the New York session. So you can say the New York session or the North American session, the London session or the European session, meaning any currency pair or any currency in the European Union is going to be affected by the London session. You can also say the Australian session or the Sydney session. Or you can say the Tokyo session or the Asian session. So any currency pair or any currency in Tokyo, in Asia, is going to be affected by what? By the Tokyo session. I hope we've made that very, very clear. So this is just a time the market is more active in that particular area of the world. And we want to take advantage of that activity. All right? We want to take advantage. And you know, by the start of a major market session, new participants are going to be coming into the game. That's point number one. Big institutions are going to be opening. Big banks, the Wells Fargo, Citi, Bank of America, big banks are going to be opening. Even psychologically, many people are going to be taking their stop losses, many people are going to be taking their profit, many people are going to be closing their positions, many people are going to be preparing for the day or preparing for that new session. Some of them who are trading from the previous session will be leaving. So psychologically, there's also going to be a lot of activity at the start and at the end of those major market sessions. So you see, that's why we want to be able to capitalize on that activity at the start and at the end of major market session. Now, main question, how do we capitalize on those activities? You need to be able to know, we're going to be using candlesticks to easily know where the market is going to be going. So you go on your 15-minute chart, and at the start, we're going to just be using, let's just assume we started with the Sydney. We're going to start with the Sydney session, and then we're going to go right up to the New York, right? If I can just zoom out, let me make this very big so that you guys can see. Sorry about that. Okay. Good. If I can look up here, this color right here, you can see that's a Sydney. Or let's start with the Tokyo for you guys to easily understand. The Tokyo, the color is right up here. Let's start with the Tokyo. Remember, the color of the text represents the color of the box. So this one, this yellow, stands for the Tokyo. The Tokyo session starts at 2 a.m. in South Africa or 00 UTC or GMT time. And I want you guys to be able to capture the move as soon as the session is open. So I did a video talking about this same strategy, but the mistake we made, back then it was still working when we were using the first candle of the session. But the modification is, remember, pay attention. This is very, very important. The modification is you use the candle, the last candle before the session opens. All right, that's the modification. So even GU students, Godlove University students, please pay attention to this. Because I remember even in the mentorship program or the course, we did mention that we're going to be using the first candle of the session. But according to the modification, what's working better is we want to be able to look at the first candle by the start of the session, how long it was. We don't want to miss this move. So that's why we are using the last candle before the session opens to be able to place our buy stop and our sell stop. So if I can put my mouse here and you look down here, just look down here, you will see that's 0145. So that's 1:45 a.m. All right. So this candle opens at 1:45 a.m. and closes at exactly 2 a.m. So that's the candle we're going to be using. When I put my mouse, you can see that's 0145. That's the candle we're going to be using. Meaning this candle, we're going to be placing a buy stop and a sell stop because we don't know which direction, we don't know who is going to be winning at the start of that session, whether it's buyers or sellers, buying or sell momentum. We don't know which one is going to be winning yet. So that's why I want to be able to go with the flow. We want to be able to go with the trend. So that's why we're going to be putting a buy and a sell stop. So our buy stop will go here. This is where our buy stop is going to go. And our sell stop will go here. So we are using the highs and the lows of the candle, not the bodies of, not the open and the close. Pay attention again. We are using the highs and the lows of the candle, not the open and the close price. So here you can see this was the open, the close, this was the high and the low of the candle. So we are using the high and the low of the candle. So we're going to be getting our buy stop right here. All right, we're going to get our buy stop right here. Our buy stop will be right there, and our sell stop will be right there. Good. So let me just put this right here. So we have our buy stop and we have our sell stop. Now, where do we put our stop loss? The distance, the body of the candle, or the distance from the high and the low of the candle will serve as our stop loss distance. Very easy, very, very easy. Meaning the distance from here to here is going to act as our stop loss distance. So if we call that distance, let me just remove this. Let me remove this. Okay. Let me remove this. So if we call this distance from here right down to here, if we call this distance, remember from the low of this candle to the high, if we call this distance X, then that X is going to be acting as our stop loss. Where do we put our take profit? Our take profit is just going to be what? Our take profit is just going to be 2 times our stop loss. Meaning if we're entering somewhere here and our buy stop is triggered, our take profit is going to be 2 times our stop loss, giving us a risk to reward of 1:2. Simple, simple, simple. So now let's easily plot what would have happened yesterday. So our buy stop would have been here. That's it. Our buy stop would have been there. And then the stop loss of our buy stop would have been where we have our sell stop. And then we go for a risk to reward of 1:2. Good. So if you can read here, it says risk to reward 1:2. So that is it for our buy position. We do the same thing for our sell position. We go on a short position. Our sell stop would have been there. The stop loss for our sell stop would have been on our buy stop. And then we go for a risk to reward of 1:2. So let's just push this 1:2. Boom. That is it. Excuse me. So you can see we have both positions. We have our buy stop in place and we have our sell stop in place. So if we can play the market, what happened? Boom. Just the next candle after that, what happened? Our buy stop was triggered. So we can then, in most cases, you only backtest to know what works for you. In some cases, I used to leave my sell stop. If the buy stop is triggered, I used to leave my sell stop for about 1 hour. Just in case if this was just a fake out and the market retraces against the original trend, it's going to trigger my sell stop. And in most cases, even though I'm going to lose 1% of my account, if I'm risking 1% per trade, even though I'm going to lose 1% of my account on the buy trade, I'll make 2% of my account on the sell trade. So at the end of the day, I'm going to be making plus 1% of my account. That's trading psychology. That's the winning mindset of a Forex trader. You need to proper risk and money management. So in this case, let's just delete it so that you can see the one that was triggered. So our buy stop was triggered, and just the next candle after that, or the next 2 candles after that, we were able to hit what? We were able to hit our TP. Boom, plus 2% done for the day. Because in this case, depending on you, you can risk what you want, but I'm just showing you guys the methodology. In most cases, I risk 1% of my account. So even if you are risking 2% of your account, you would have already made 4%. Or even if you are risking 0.5% of your account, you would have made 1% of your account. But I always go for a risk to reward of 1:2. Meaning, even if you were going for a risk to reward of, let's just say, let's keep going, that's the risk to reward of 1:7. So even if you, sorry. Okay, so you just cut again from here where it says even if. So you see, even if you were going for a risk to reward of 1:7, you would have still hit take profit, meaning you are risking 1% of your account to go for 7%. This is what they used to call A+ setups, all right? You're just risking 1% of your account to pass the challenge, all right? But in most cases, just be realistic. I used to go for 1:2 because I'm going to get many trades and I just keep compounding 1:2, 1:2, 1:2. That's what I do most of the time. So you can see, boom, as soon as my target is already hit, what happened? I'll just go now to the end. I'll just be waiting for the end of that particular session again to trade. Meanwhile, I'm waiting for that particular the end of that particular session, which was here. Remember, the other session is going to open. The London session opens right here. Can you see? And before, where is the last candle before the open of the London session? This is the last candle before the open of the London session. So voila, I'll just come here again. You can see here, this is 8:45 right down here. You can see this is 8:45 down. So this is the last candle. My buy stop is going to be there. My sell stop is going to be there. And boom, what happened? You can see my buy stop got triggered right there. And what happened? Let me just put our buy position. This is where we got triggered with our buy stop. Remember, our stop loss is going to be where our sell stop is. and we go for a risk to reward of 1:2. Boom, we already hit 2% again. This is still the same day. Still the same day. In less than 4 hours, we've already made how much? We've already made 4% of our account if we are risking 1% per trade. Boom, that's it. Our buy stop, as soon as the London session opens right here, that London candle, boom, hits what? Our buy stop, and we already hit 2% of our account right here. Good. Now I want you guys to pay attention. While we're waiting for the London session to open, you can see there's something that happens here on what? By the end of the Sydney session or the end of the Australian session, which was at 8 a.m. my time. And where is the candle before the 8 a.m. in our case? So the candle before 8 a.m. is this 7:45. So we would have gotten our buy stop. I want you guys to learn a lesson here. We would have gotten our buy stop here and our sell stop here. So you can see this one, the first 15-minute candle didn't trigger anything. First 30 minutes, first 15 minutes, another second 15 minutes, which was 30 minutes, didn't trigger anything at all. And then what happened? The next one, which was the 45-minute candle, triggered our sell stop, which that one didn't go our way. You can see sell stop, the market just went in our favor and then retraces. So this one would have been our loss. So what I used to do as a rule of thumb, if I have both my buy stop and sell stop open for more than 45 minutes without each position triggering, I go and delete them and I wait and trade the next session. All right, so that's still something you can practice on your side. Maybe you can leave it open for 30 minutes. If after 30 minutes it's not triggered, then you go and delete. After 45 minutes or 1 hour, so you just backtest that to see which one is going to work better for you. So as we're still waiting, okay, let's just assume we made this one and we lost 1%. It means we already made 2%, 4%, we lost 1%. We are still with 3% up for that day. Let's go to now the next trade. Okay, let's delete this, do this, and do this. So while the London session was up, while we already made 2% on the London session, look at what happened. Remember, you need to see all the lines. Look at what happened right here, which was the close of the Sydney session. All right, this one was the close of the Sydney session. The close of the London session was right here. All right. And where is the candle before the close of the London session? The candle before the close of the London session is here and here. All right. So this one, you can see the candle, the London session, or the candle before the close of the London session was this. So the close of the London session, the first candle closed by triggering our buy stop, but the market didn't go our way. But see what happened? It retraces and closed and triggered our sell stop. When it triggers our sell stop, the market then went in our favor. So we lost 1% up there, and then boom. Remember, this would have been our stop loss where our sell stop is, and we go for a risk to reward of 1:2. So risk to reward of 1:2. Boom! Look at that. Look at that. Very, very nice. Very, very nice. So this one, we hit our take profit right here. So we already made 2% here. We already made 2% again here. Lost 1%. We're back with 3%. Then here we lost 1% again. We're back with 2%. And then we make 2% again on this one. We're back up with 4%. Now let's go to the open of the New York. I hope you guys are paying attention with this. Let's go to New York. New York is right here. This is the New York candle. And where is the last candle before the open of the New York? This one. So our buy stop is going to be here. Our buy stop is our sell stop is going to be there, and our buy stop is going to be there. And boom, can you see that? Our sell stop was triggered in grand style. So this is our sell stop, which was triggered. Our stop loss was right there. And if we can extrapolate down, risk to reward of 1:2. You can try 1:3, 1:4 is for you, but in most cases, I just go for 1:2. So 1:2, boom, we made 2%. Remember, we're already up with 4%. See, for that day again, we are now up with 6% of our account. 6% for that day alone. Then you just continue going. This is now the end of what? The end of the New York. So even if you traded the end of the New York, you have seen this one would have been triggered and you have still made 2%, 8% of your account for that day. I think this strategy was supposed to be illegal for me to be bringing it for free on the internet. But remember, everything I do in the Forex market today is it's a promise I made to God, because I'm someone who is very religious. When I started Forex trading, it took me 3 years to be profitable. And within those 3 years, I was learning how to trade. I used to tell God that, God, bless me to know this Forex. Bless me, impact my life, and I promise I'll impact another person's life. Make me to know this Forex, and I promise I'll teach another person on how to trade the profitable way. So when I became profitable, I opened my YouTube channel in 2021, and it became the fastest, in 2022, I guess, and it became the fastest growing YouTube channel in terms of Forex trading. And today, we have the biggest YouTube channel in Africa in terms of Forex and in terms of finance. So I can't just say, okay, I'm going to keep this to myself since this is a very profitable strategy. Other people are going to make money. No, if I don't instead do that, I wouldn't be fulfilling that promise I made with God. And I believe that was the reason why God made me profitable, because he knew I was going to be teaching you guys how to also be profitable, how to also create wealth through Forex trading. So go back. This strategy is going to work on any pair. All right, on any pair, don't worry yourself, it's going to work on any pair. The only modification is now when you go to US 30, you're only going to be trading 2 sessions, the London and the New York, and only the start of those sessions. Beside that, you can backtest this on major currency pairs. So you just go and research what are major currency pairs like Euro USD, USD JPY, Great Britain Pound USD, Great Britain Pound JPY, USD CAD JPY. So it can work, it will work AUD USD, it will work on all those currency pairs. All right, and as you can see, the strategy is not 100% accurate, right? It doesn't have a 100% win rate. There is no strategy on earth as of now that is having a 100% win rate. But with proper risk management, some of my major strategies that are giving me money in the Forex market only have a win rate of 40%. Meaning, even with this one, if you have a win rate of 40% on this one, you are still going to be making money. Let's do the math. If you take 10 trades, let's just say within the day, you traded all the sessions and you took maybe up to about 10 trades, or within 2 days, you took about 10 trades. And out of those 10 trades, you got just 4 of them right. Even no matter how you're cursed, you're going to get at least 4 of them right? So you got just 4 of them right, and 6 of the other ones were all losers. Those 4 you got right, remember you're going for a risk to reward of 1:2. You're going to make 8% of your account. And the 6 you got wrong, you're risking 1% of your account. So you're going to lose 6% and make 8%. At the end of the day, what's the net? You just subtract what you lose from what you made. You ended the day with plus 2% of your account. Plus 2%. Show me someone who can end the month with just plus 2% of his account. Just ending the month with plus 2% of your account, and I will show you a multi-Forex millionaire. Just show me someone. So this strategy is a strategy you guys should be able to start using it immediately after. Go back. You'll all be able to have an edge if you spend more hours back testing it on different currency pairs, back testing it on different time frame. Trust me, there's enough money in the Forex market for everyone. The fight is with poverty, all right? The fight is with poverty, not with one another. Go make me proud. Go make my mission a fulfillment. Go make my dream a fulfillment by also creating wealth through Forex trading. If you want me to mentor you one-on-one, check out Godlove University. You're going to see my mentorship link on the video description. Also join my free Telegram. Check out my recommended brokers that will be able to pay you if you actually make the money. Check out my recommended prop firm where you can get funded up to $600,000. And this strategy is accepted on that prop firm. I mean, you can use this strategy on my recommended prop firm, which is Lionheart Funding Program. And if you want to use Petrex Pro, which is the most viral and the most profitable Forex robot, 3 years in a row, check the video description to get Petrex Pro. We just released the 2025 version of Petrex Pro, and it's high time for you guys to use this tool before it is discontinued from the public, because from what we're getting, very soon we might be discontinuing Petrex Pro from the public, because this robot is being used by banks and by institutions as we speak. So go take advantage of it. You can use it on your private account and also your prop firm account. Check out the videos that are going to be coming at the end of the screen, because they're all related to the same topic, and I'll see you guys on these other videos. Peace.